My fellow Bitcoin investors and strategy investors, are you a little nervous about the looming possible Bitcoin bear market that's coming up sometime in the next 6 months? Are you concerned about the price of Bitcoin, MicroStrategy, options funds, or leveraged products that you have in your portfolio dropping in value and being able to weather that bear market that could possibly be coming our way? I'm going to go over if you should be worried about it, the timing of it, how can you time this to dollar cost average out or to sell out of some of those ETFs that you may own, or MicroStrategy itself, or Bitcoin. You may choose to just hold through it, which is fine. Or, is there a strategy you can use to mitigate your risk and, remove some of that risk, roll into some other asset, and then be able to buy back in sometime early next year. So we're going to go over that and give you some reasons to give some thought to this, and possibly make a plan and prepare for it, and what that plan might be. This is an independent analyst. He goes by the name of Colin Talks Crypto. It says, remeasuring the last three bull market advances from their bear market lows, he, which is this independent analyst, finds a near uniform 35-month span from bottom, so the bottom of the bear, to the peak. An observation that, if it repeats, would place the next potential cycle top around October 2025. So we even have the month down where, according to this observation, like, it's been this way the past two cycles, and pretty close, the past 3 and 4 cycles of this 35-month span to the month. So if this repeats again, it would bring us to October 2025. Now, I kind of have a problem with that month, this specific time frame. If you recall, some of my earlier videos, I went over this. So if we look at the Bitcoin monthly return averages chart, we can see October, it has a pretty good return on average, 21.89%. But the biggest average by far throughout the year is actually November. So that's 46.02 on average. And then it dips in December and January. So I would, probably go with November on this. Is it 35 months exactly? No, but it's very close. And you can anticipate this as being a peak, possibly, to mitigate some risk and move out of those leveraged funds like MSTW, or the capped upside options funds like MSTY. You could even do this with, of course, MSTR, spot Bitcoin, whatever you want to do. So one of the reasons you may choose to exit out of something like MSTW is it's a double leveraged Bitcoin. So when we look here, the MNAV of strategy is 1.58, so we have some leverage there. But then you add on top of it Roundhills leverage, which is 1.2, so it's double leveraged. And that's where the risk comes. In a big bear market, that could be a big drop. I don't anticipate a huge bear market like we had in the past, but I do think there will be a shortened bear market. There's still some risk there. Now, does this kind of force your hand? If you're into products like MSTW, does it force your hand to try to time the market and sell out, near the peak, and then buy back in at the bottom of the bear or close to the bottom, right? You can't get it perfectly, but if you, DCA in and out, you should be able to do really well. I think it kind of does, because of that double leverage. I think it's risky to hold it. Now, do you have to sell out 100%? I don't think so. I think you could, possibly sell out in percentages and use a dollar cost average, exiting out of the position to, really mitigate that risk. Now, when we look at, December, let's say your pretty much sold out of your position in December, whether it's the beginning or later in the month. One thing to consider is some of the seasonal factors with other investments, because remember, if you sell out of those positions, your MSTW, your MSTY, or BTCI or MSTR, you want to roll that into something else, whether it's cash or just another equity. So this AI overview says the stock market often performs well in December due to seasonal factors like holiday optimism, a decrease in institutional trading and tax loss selling, and year-end portfolio adjustments, which together create a Santa Claus rally. However, the market can also weaken as evidenced by specific instances of downturns. Yeah, there's no guarantee, but we all, us seasoned investors, we know about the Santa Claus rally, and there's a good possibility that that happens. So there's optimism and holiday spirit. It often leads to increased optimism among investors and positive sentiment in the market. Then there's less institutional trading. Institutional traders reduce their activity, close their books for the year, and then that allows individual investment sentiment and smaller trades to have a greater influence. So that's what we need to consider. Let's say you sell out by at some point in December. Do you go with equities or cash? Right? That's the big question. Or do you do something like 50-50, cash or cash equivalents or some other option, and equities? So here's some things to consider. Institutional sell-offs and tax loss harvesting weakens, right? So that would be a tailwind for equities. Expected Fed rate cuts give boost to equities. And also in December, the Santa rally, and then this goes into early January, increased market optimism and sentiment, okay? And then now if you decide to just go with a cash position, I know a lot of investors, they like to go with SGov as an alternative, and there's other assets out there that you can go into, not just SGov, but I think that's a good one to consider. Let's say it's a short and bear market and it goes from the top and reaches near the bottom in a couple of months. Well, you can hold that SGov for a couple of months, right? And it's pretty liquid, it's stable, and you could just get your money back, so to speak, and buy in at the lower price. So that's something to consider. Now, I think that I would go into equities because of the Santa rally and all those things I mentioned, all those other factors. I think equities are going to do really well, so I could just at least trim some of that MSTW, MSTY, or sell out the majority of it and go into something else. I don't think I'm really missing out, even if Bitcoin continues to climb in price past December. It's possible I miss out, but one way you can look at this is, let's say it does continue its upward trend into January. Well, other equities should be doing well. Other assets should be doing well. It's possible you miss out, but with that money, right, you bought some peace of mind because you mitigated your risk. So you can look at it that way, right? There's different things you could buy with your money, and your confidence and your peace of mind is part of that. So what's the payoff? Let's say, because you're taking a lot of risk in timing the market, you could be wrong. You could sell out, late November, early December, and Bitcoin keeps going up. Obviously, if there is a bear market around that time and you get the timing somewhat right, you could, dollar cost average out, right, in November, December, and hopefully you hit some of those peaks or close to a peak. All right, so you could buy back in, hopefully at a lower price. That's one thing that would obviously help you, is you actually do get in at a lower price, somewhere Q1 of next year. Then after that, you have a 3-year runway where your MSTR ETF just prints money. You make it to the other side of that bear market and you have a long runway. And is going to be just great, right? Even if you don't get it perfectly, it's still going to be a good payoff. There's minimal to no bear market confirmed, right? Because a lot of investors believe that, and analysts also. They're not convinced that a bear market's going to happen. Well, if you could then hodl in the future with more confidence because you realize that the Bitcoin cycle is forever altered and you don't have to worry about this so much, 4 years down the road. So that's one possible, DCA method, is to DCA out over, say, a 5-week period, 20% a week. And then with that, with that possible peak in that time frame at the end of that 35-week cycle, you could add in some TA on Bitcoin or MicroStrategy. If you can't do TA yourself, there's plenty of people that you can follow that do TA on Bitcoin and MicroStrategy, and that could also help you, try to get the timing down right and really make off really well. Are you going to try to time the market? Are you getting nervous? I would say make a plan now. Don't wait and see some plummeting price in Bitcoin, in December or January, and start to panic. Oh my God, what do I do? If you get a plan in place early, even if you need to write it down, that could really help you. And just get it in your mind. Hey, I'm going to put this into effect, starting around this time of the year, and I'm going to combine that with some technical analysis, and hopefully I get this right, and my portfolio does better because of it. Don't forget to like, subscribe, do all the things, and I'll see you in the next video. Stay tuned.